Markets are all about psychology. And if everybody expects something to happen, it won't happen. So everybody's kind of got in their heads that the cycle finishes in December because that's what it did in 13 and that's what it did in 17. So my guess is we probably have a sell-off and then it rips again because that is the path of most pain. The difference with things like crypto is the users are the owners. So if you own Bitcoin, you actually own a part of the network. So that's why it becomes incredibly powerful. Ethereum, the network's growing faster because we've got so many developments on top of the network, much less on Bitcoin. So we've got a huge growth in the network of new people joining it, and then all of the network connectiveness of these new businesses. And we've seen the rise of NFTs and the rise of DeFi, in the last year. And so it's working perfectly within this Metcalfe's law model. But then I started realizing, what I then realized is you start to see some other breakout tokens like Solana and Terra. So I modeled those. They're also exactly following network adoption models. And then what's really spooky about it all is Ethereum is exactly following even time and price and chart pattern Bitcoin in 2017.
Wow.
But Solana is exactly following Ethereum 2017. And if you remember what Ethereum did last time around, because it's earlier in the network and the exponentiality is larger. So I'm starting to realize that the whole space is the same thing. And that is a key for us all to be able to understand how to value this stuff. What's real, what's not? It's simple. It's the network. Building a portfolio is about deciding what it is you're trying to achieve. So let's say you are a value investor. Maybe that's your bias, right? An equities value investor. You understand that, you're comfortable with it. You're comfortable with trading the commodity cycle because you know how commodity stocks trade and that. Absolutely fine. The issue is if you overly diversify, you almost certainly won't, which is the opposite of what the industry tells you. I think you're better off to become an expert on what you know and then start thinking about, okay, if I've got that bit covered, let me think about the tail. Maybe I should just have some exposure to this new world, the bit that I don't understand. But if I put some on, I will begin to learn because I have to, because it's in my P&L now. And I found that that's tremendously helpful. It's just getting something on, getting a trade on, feel what that new volatility, you need to deal with different volatility than you were used to, different market players and stuff like that. So, I'm a big believer in that. If you're in crypto, right now it's very difficult to find any reason to invest outside of crypto. But everybody knows there is a cycle in crypto. And when it comes, it's brutal. So you don't need to subject yourself to the 90% downside. Let's say you don't want to sell any of your crypto. You're all in and you want to be in for the next 10 years. I get it. But if you bought some of those technology stocks, they're likely to do well when crypto's not doing well. Okay, you can apply what you know about crypto and just move it into technology a bit. So that's not a big leap of faith. You're probably unlikely to be a value investor because it requires a very different mindset. But to go into be a technology investor, well, that's what you are in crypto. You are a technology investor investing on the future of networks. So use the same framework and build out your portfolio elsewhere. And what you'll find is if you get it right, you should still have the high returns, but you'll lower your volatility, and that allows you to sleep at night. So everybody's kind of got in their heads that the cycle finishes in December because that's what it did in 13 and that's what it did in 17. So my guess is we probably have a sell-off and then it rips again because that is the path of most pain. And markets tend to have the path of most pain. Why is it going up right now? Because the institutions aren't in and there's no ETF, so retail aren't in. So the path of most pain is it going up while people aren't in. But the path of most pain would be a bunch of people sell out thinking they're being clever and the market goes up. Why will it go up? Institutional adoption is not going away. The retail ETF is coming. It'll come out in the next couple of months. So we're going to broaden the access and we're going to bring institutions. Institutions tend to make asset allocation decisions by quarters. And my guess is January to March quarter next year, we're going to see a huge inflow because the ETF will be out. So pension funds and everybody else. So I think it's going to push it out a lot further. I think the other big driver of this market is going to be ETH 2.0. And the reason being is everybody is staking their ETH. It's creating this incredible supply and demand imbalance in ETH, where there's only about 11% of the total ETH supply available. Everything else is locked up for this staking, where people are getting a yield to secure the network for ETH 2.0, or people are just sticking it into wallets. So there's no ETH around, and exploding demand from NFTs, DeFi, and other investment, and there's going to be an ETF. So that's a ridiculous setup. But ETH 2.0, again, think of investor psychology. You've staked your coins, you're getting your yield, and ETH 2.0 is going to come out somewhere between March and June, let's say. Well, when it does, you don't need to stake as much because it'll be unlocked. So what you're likely to do is sell some of your ETH to buy a house or do whatever you want to do, because you'll have made plenty of money from it, and that will create a market shift. So even though ETH 2.0 is incredibly bullish because it turns ETH into a deflationary asset, it'll be a buy the rumor, sell the fact. So I think all of that means that we're likely to see an extended cycle, and I think it extends into between March and June. And I think that makes sense as the network is seeing deeper adoption and richer adoption. I think, A, the volatility comes down over time, and B, the cycles extend and then the performance lowers over time. But that's okay, because we can find the other new network adoption tokens in the space, and they should follow how this all works. So it's all there and available. There's been two things happened in Ethereum that are game changers. One was the EIP 1559, which was the change of methodology with what they did with the gas fees. So that meant the supply of ETH was being reduced because of the buybacks. So it went from about 4% supply to about a 1.5% supply of ETH. So now there's not a lot of ETH. And we talked about the other supply and demand imbalance. So obviously the price starts going up dramatically from that moment, which was over the summer. But proof of stake is different. You get rewarded a yield by staking your Ethereum to secure the network. It uses infinitely less energy, but is also very secure and very efficient. And it's going to create a further issue with supply. And what that's going to mean is ETH becomes a deflationary asset, i.e. each year there's likely to be less ETH than there was the previous year. And if there's still network demand for ETH, well, then the price rises dramatically. Now, the question is does that bring down the fees of using ETH enough? Probably. But if not, okay, people are going to use different chains because, ETH becomes more expensive to use. But, this is a really, really powerful thing. And I think the ETH cycle is going to be a big driver of everything.